All right, welcome everyone. Welcome. Hey, 3 likes. Awesome. Welcome back, guys, to the live stream. It's a lovely Thursday night. Hopefully, you guys are able to hear me just fine. But just to make sure everything's all right, let me make sure that I am able to give you guys a good audio here with my voice and the music in the background. Okay, I think this should be good. All right, so as you guys can clearly see on the title of this live, okay, we're gonna talk about the worst performing trading month, which is September, ahead of us, and Jerome Powell. Okay, so Jerome Powell is speaking tomorrow. Right, he's speaking tomorrow. You guys have to remember that. The Jackson Hole Economic Symposium, okay, is occurring right now. That started yesterday and it will go into Saturday, okay? Or actually, hold on a second, it started today. My apologies, it started today and it will end on Saturday. Okay, so the Jackson Hole Symposium, it's a yearly thing. It's an annual thing. I think the 2023 event, I think it was 40. Yeah, the 46th event so far. So they've held 46 events every single year. So it goes quite a few years back, and they're almost nearing their 50th year, so that should be fun. But again, this is where central bankers from all over the world, right, and I think even politicians come by as well, if I'm not mistaken. But mostly it's for economists, analysts, central bankers. They all have their eyes on this, and they also attend this event in Kansas City. So hopefully, Jerome Powell doesn't switch too much from what he said in the previous FOMC meeting and news conference, and he doesn't stray too far away from what was said and what was decided in the FOMC meeting in the most recent one. So I kind of want to see how tomorrow plays in with the seasonality trend that we're seeing right now, which is definitely, if you guys are living under a rock, we've been in a pullback, right? So September, from usually starting from July to September, tends to be one of the worst performing months. So basically quarter 3. So if you guys have been following me for the past few weeks here, I've been telling my private members and students that we need to take our hands off. Okay, we shouldn't be trying to trade as much as possible, and instead just lay back a little bit. And you can be exposed a little bit here and there, but it's a lot better to just sit back and watch the markets and wait to see it until better conditions arrive. And I truly believe that we'll see these conditions, better conditions arriving from the transition from quarter 3 to quarter 4. Okay, I have explained this multiple times in the CFO Spring and Watch newsletter that is sent out to my students and my private members for the past couple of months as to what we should be seeing. And I gave them a full detailed outlook on what you should be expecting from quarter 3 to quarter 4. So from the transition from the month of September to October, and what October will be like as well. Right? So if you guys want to know the details on that and the entire outlook that I provided for my members a couple weeks ago, make sure you let me know and I will provide it for you guys. Okay, so for Jerome Powell, so people are expecting him to be a little bit dovish, right? Why? Because he basically held a slight, surprisingly, dovish tone during the most recent news conference after the rate decision came out during their most recent FOMC meeting. So, with that type of, I guess, precedence in mind, you have to remember a CPI report came out, and we're still expecting another CPI report to come out as well, and before the, I believe, September FOMC meeting. And so, there's a possibility that Jerome Powell may have switched his tone and outlook in the economy, in the overall economy, including with all the jobs numbers and data coming out as well. So there is a chance that he can be, again, dovish. That's what I'm betting on, and that could potentially give us a nice lift from today's price action. However, since we are still following the seasonality trends so perfectly, well, we've been following the seasonality trend throughout the entire year so far, and if you guys are wondering what that is, it's the pre-election seasonal trend of the presidential cycle that affects the markets. And of course, there's a bunch of other seasonality trends that come into the presidential cycle as well. So it's a plethora and a mixture of all these different seasonality trends. But this specific one, the pre-election year of the presidential cycle, matters a lot. And right now, we have been following it to a T. So that is something that you guys should know. And usually, quarter 3 tends to be, again, one of the worst performing quarters in the pre-election year. However, it's not as bad as, if it wasn't a pre-election year. That's one thing to take note of. And so we can potentially have a very volatile September as the market tries to bottom out right before we transition into quarter 4. So that's definitely something to also take note of as we head into the end of August and into September. But at the same time, we shouldn't always be trying to follow exactly what a seasonality trend is going to do. Because again, for example, February is supposed to be one of the worst months, right? But this year we saw February all the way up to March being probably one of the worst months, a few months in this entire year. I believe, I think, these 3 summer months are about to beat that, if I'm not mistaken, or it has already beat. No, I think it's about to beat that. If we do decide to move lower, obviously. So SPY right now on the monthly time frame. Okay, August is not looking good. Okay, actually, let me take out everything here. Okay, so on the monthly time frame, August really not too good. We're down 4.57%, almost 5% here. And if the seasonality trends are true, we can come all the way back down to 420. And so into September, we can see another large pullback back down, probably more, around almost 20 points here. But obviously not 20 points. But from the closing price here, 436.89 to around 420, okay, there is a possibility for us to go all the way back down there. Now, why am I saying 420? First of all, right, you might be saying, wait. Is that just a funny, number to be looking at? No, there is a reason for that. Well, we have this gap up that we've never filled in, All right, I've told my members this multiple times, as we're heading up higher earlier this year or earlier this summer before, I guess right before summer started. This gap up is going to provide us with a potential move in the future where we can see this gap being filled. And so now that we're in a period in the market where the seasonality trend is telling us that we're looking for a larger move to the downside and actually a healthy pullback, which is what we're witnessing right now, there is a huge chance that we can come back down and fill this gap here and then reach 420, which is a psychological whole number here, and then have an actual pivot that can help us rocket higher from October all the way up into the end of this year. And that's exactly what usually tends to happen during the pre-election years. And so tomorrow, with Jerome Powell speaking, so now let me try to integrate what I just told you guys with Jerome Powell. So today, obviously, very, very bad day. Why? Number one, we actually retested the daily 50 SMA, the dark blue line, and we back tested the 21 SMA, the short-term momentum SMA here for myself. Again, the only reason why I say for myself is that people don't use the 21 SMA. Some people might use the 21 SMA, but I know other people like to use the 20 SMA or whatever else that they're using for the short term. But for me, I use the 21 SMA. Now, regardless of the SMAs, if we just take a look at the actual candlestick itself today, we have a bearish engulfing candlestick. And these candlesticks were prevalent throughout multiple names, maybe hundreds if not thousands of names today that were affected by the overall market movement. And so I totally expect to see another large move down, maybe even Friday, tomorrow. But again, we got to integrate what Jerome Powell might say tomorrow morning. So my prediction so far has been, okay, this is completely, just a gut feeling, right? Not even just a gut feeling, it's just, speculative, just complete speculation. All right, so don't take my word for it here. Just take this with a grain of salt. But if Jerome Powell speaks with another dovish tone tomorrow, I expect the markets to kind of, jump up higher, right? Maybe try to regain the losses that it created today. Maybe even retest 440, all right? This whole number at 440, and then we reject down, and then we move lower once more, all right? So again, if we decide to move lower into the end of August and into the beginning of September, it only makes sense. And we will be following exactly what the seasonality trend is telling us, and the seasonality trend of the annual, not just the annual, the entire presidential cycle, which is right now we are in the pre-election cycle, right? Or the pre-election year, the third year of a presidential term. So, hopefully we can be seeing some pretty good price action into September. But I am again expecting September to be very volatile because again, like I said earlier, the market will try to find a bottom somewhere early to late September, but I can see that failing, right? And we can actually see a true pivot forming in October, right? Not even at the beginning of October, but I see it somewhere around the middle of October, right? So again, right now we are in a very, very typical bull market. So I'm not going to expect a complete V-shaped recovery in October, or I'm not going to expect a sudden pivot and a sudden reversal back to the upside at the beginning week of October, right? That's unrealistic. And, realistically speaking, not just from an idealistic perspective, I just expect to see some sort of a bottom forming during the first few weeks of October, and maybe right smack in mid to late October, we start to see that bottom playing out by having the price reverse back to the upside. Okay, so everyone is expecting right now a huge market crash, and then on the other side, everyone is expecting a huge V-shaped reversal, right? And that's how human emotion goes, and that's the reason why the market moves and in the way that it moves. And that's also the reason why we tend to get very volatile price action, like, for example, yesterday and today. Very, very different price trend and price action. Even just the price range today, right? Crazy. Right, we're we're down almost 1.50%. We ended today with 1.39%. So, what was interesting today was that, I was expecting to see, a little bit more of a push up higher, maybe even retest at least around 446 around there, but we didn't even get that, and instead we immediately right after open just smacked right down after retesting the daily 50 SMA. So that is something to consider here. Again, we are looking at a bearish engulfing candlestick, and usually the next candlestick that forms tends to give us the confirmation that yes, this bearish engulfing candlestick needs to be taken seriously as we're about to move down a lot further for the longer term. And if that truly occurs, then we are still in line with seasonality trends to a T. All right, because remember, we have been in a bull market for the entire year. And again, I've been telling everyone this since last year. 2023 to 2026 will be the years to be involved in the market. So you got to pay attention to the market when the market dips. This is the time, right? This is the time. If you have missed the past 6 months of gains, right, ever since the market bottomed out, I would say in October lows, right, which is last year. But again, if you missed that one as well, if you missed the December lows, right, or even just the January lows when we started this new bull market, right, this is now the time to be learning and being involved with the markets. All right, that's the perfect opportunity whenever we are in a bull market. A pullback, right? A pullback is the perfect time and perfect opportunity to get involved and to learn about the stock market. So if you guys are the type of person, or if you guys are in that current situation right now where you're wanting to learn the stock market and trying to trade, make sure you guys hit that description box down below, click on it, and it'll expand to my first link there where you can book a free strategy call with me. Okay, so strategy discovery call. You guys can, it doesn't really matter, but discovery, strategy, same thing. So if you guys want to book a free 30 minutes or even more, 40 to 45 minutes, sometimes I usually go over a strategy call with me, let me know, or just book an appointment down below. So, but if you guys really want to strike up a conversation with me before we do any type of a face-to-face appointment, make sure you guys DM me in my Instagram, right? And so all you guys have to do is just search up Charts Focus 1 and I will be there, right? So just DM me your name, whatever, and your greeting, and I will try to answer as soon as possible. Okay, so I do get a lot of DMs, so make sure you guys try to bump up your message here and there if I do not respond, or if I forget to respond, or if I don't even simply see your message, right? So again, perfect time and opportunity to be involved in the markets because we're seeing a nice pullback. And if the seasonality trends are true, okay, for this pre-election year, we should be bottoming out somewhere between the transition from quarter 3 to quarter 4, and somewhere around mid-October to late October, we'll see that bottoming out, consolidation, sideways movement, whatever you want to call it, starting to actually play out as the market starts to move back up to the upside, and we start to reverse all the way up into the end of this year. So I am still pretty optimistic in the fact that I totally expect to see new year highs, because right now the highs that we made for just this year is at 459.44. So that means that I'm expecting to have us end this year, this fiscal year, a lot higher, right? Possibly even to up to 470, if that's possible, right? If we can recover very nicely from this healthy pullback. Okay, so the stock market right now is going through it, but again, this is also another opportunity to try to go long on SPY. Right, this is the perfect opportunity to invest into just SPY itself. Right, this is a great ETF to invest in, and obviously it's an ETF that gives out dividends as well. Right, it's a pretty nice dividend there too. So, SPY again, if you guys missed out on the entire rally up higher, that even before we were at the 400s here. If you guys didn't catch that, which I did back in March lows, and if you guys were not able to find any type of quote-unquote dips to buy, or dip buy, or buy the dip, right? this might be the perfect opportunity here. Okay, so I am looking to see if I can potentially add more to my position that I added on March around here. Right now, I believe I added like what? I don't remember the specific date, but it was around late March. Yeah, mid to late March, somewhere around there. It's definitely right here though, in this area. I'm gonna have to check. But again, I've just been writing this one out, right? I mean, it's SPY. So, if you really want to, again, get involved, make sure you get involved. Okay, guys? This is the perfect time. I'm not going to say this again. Right? Perfect time. Maybe I'll say it again on my Instagram, but yeah. So SPY, we have one of the worst performing months ahead of us, right? And we have Jerome Powell speaking tomorrow morning, early morning. So again, hey, what's up, guys? If you guys are enjoying the information that I'm giving you right now, make sure you guys always leave a thumbs up down below. It really helps out with the algorithm. Okay, so again, guys, also, if you guys aren't subscribed, I don't know how you guys aren't subscribed and you guys are joining this live stream, but if you guys aren't subscribed, make sure you guys hit that subscribe button, right? And also, once you hit that button, make sure you guys hit that notification bell as well to turn on your post notifications to tell you when I am live. I believe Instagram, I believe YouTube sends out emails, and also if you guys have the YouTube app, I think it will, send you a notification as well. So, again, I'm gonna say this one more time. The market is in a pullback. And with the fact that our worst month is coming up ahead of us, which means we're gonna see a further pullback, right? That means a lot of names that have benefited from, this year's bull market so far. This is your opportunity, right? This is your opportunity to get involved in the markets. Because again, you're probably going to have a time frame of at least a month and a half to get ready to be involved in the markets, right? As the market continues to cool off from the lows that it made at the start of this year, right? And we've been moving up higher and higher and higher despite all the fear mongering, people out there who are saying that the market was going to crash in the bottom of December or January and the bottom of October. And I've been saying the exact opposite, saying that no, the market has no reason to crash right now. And guess what? Right? We are in a bull market. And I completely stand by my statement that I said last year that the market will be in a bull market, or at least the market will not be crashing from 2023 to 2026, which is the reason why I've been constantly saying since last year and even late last year that we need to be involved. You need to be involved. From 2023, which is this year, to 2026. And right now, if you aren't involved, again, I'm gonna say this one last time in this live tonight. The market should continue to pull back from right now into September, right? And possibly again bottom out somewhere around October. Okay, so again, the only reason why I'm saying this is that I'm following the seasonality trends. Right? I gave all the reasons and even more detailed reasons to my members already a couple months back. And so again, everything is playing out just the way I gave the analysis to my members and students. So again, if you guys always want to be on point with your analysis, or even at least be able to follow what could potentially happen in the future, make sure you guys let me know. DM me on Instagram, we can work something out. Okay, so again for SPY, hey, the Funk, what's up, man? My apologies, I didn't even see your messages. All right, 4 likes as well. Thank you guys, thank you. Thumbs up as always. Gonna be a nice bounce, yeah. So again, I'm expecting some sort of a bottoming price action to occur. From I would say like early to mid October, and then the actual reversal to begin from mid to late October. Right, that's the realistic picture that I have in my head and that I've painted in my head for the past couple of months. As I was expecting the market to pull back with the seasonality trends, and the overall summer months being one of the worst, performing months for a pre-election year. Okay, so hopefully tomorrow, Jerome Powell doesn't screw up the markets too much. In fact, I want to see a nice pump up thanks to Jerome Powell, so that we can see another ad for myself to my short positions, or a position that will benefit from the market going down. And so I'm not going to reveal that yet to you guys, but once I am exited out of that position, I will tell you guys which one it is that I played. So again, the market is at a perfect opportunity here for you guys to be learning and really just focusing on trying to understand how the market cycles work, how the market flow works, right, and how to trade. Okay, so does anyone have any questions, or if they want me to go over, well, if you want me to go over any tickers, I can go over that right now. Okay, so I also sent out a list last night. So while I'm waiting for you guys to either send some tickers in the live chat room, I think it's down below if I'm not mistaken on mobile. But anyways, as I'm waiting here, I'm gonna tell you guys the fact that I gave out a early relative strength list to my members. So what that is some names, right? Some names, I'm not gonna tell which ones yet, but I will possibly post it on Instagram. Okay, so some names have already began to bottom, literally. So I think some names are really just have been beaten up so much that at some point it's just going to completely forget that the market is moving down, and it's going to start moving the complete opposite way from the market. And that's the reason why it's been included in the RS list, the relative strength list, or early relative strength list. And so again, I'll be posting that in the next few coming weeks. Okay, but overall, my members were able to get a pretty good idea of what names that we should be watching out for, especially when the markets decide to bottom out from the transition from quarter 3 to quarter 4, and also know which names that they should be trading because of that relative strength when the market also decides to reverse back up higher. Because again, these relative strength names are now bottoming out, or some of them have already started to move back to the upside. Does that make sense? Okay, I really hope that made sense. Right? So, it's really important that you guys understand that, especially with Jerome Powell speaking tomorrow, we are in a downtrend, right? It's sad to say that, but we are in a downtrend, right? We have rejected at the retest of the daily 50 SMA as well. Plus, we have rejected at least a pretty good test of the area of the short-term momentum 21 SMA, this light blue line. Okay, so it was a double whammy today, right? We got slapped back down by the short-term and long-term SMAs. Okay, so definitely tomorrow, if we do see Jerome Powell giving a nice little pump early in the morning, I'm going to start adding to the position that I am currently in that will benefit from the markets going down. Okay, my members should be able to know which one that is if you guys take a look at the specific channel on the Discord chat room. Okay. Hey, Commander Sparky, what's up? What's up? The Don Chef. What's up, man? So, again, today it really just felt like the market was, it really didn't care what NVIDIA did yesterday and how, the overall AI sector, I guess the AI industry, performed so far. Clearly, if you take a look at the name actual AI, destroyed. Absolutely destroyed today. Right? So, I think AI will definitely continue to move down. And a possible buy point for this one will be around like 25, because that's where the daily 200 SMA is heading towards, right here, this yellow line. So, Commander Sparky said, I just joined, but can you look over the energy sector? Okay, sure. And also, I think I just saw your message on Discord as well. You said, what do you think will be a good buy on EMPH? Oh, great question. You know what? Let me take a look at EMPH first, and then let me go over the energy sector. So, EMPH, yeah, so this one, I'm so glad I got out with a stop loss on SCDG today as well. All my members should know this one, right? So this was on the newsletter, and I was able to get in with a very nice buy point yesterday. Actually, I actually rolled up, but again, thank God for stop losses, because I would have been slammed if I decided to just hold throughout the entire day up until close, right? Look, I even wrote it right here, right? This was in the newsletter. All right, stop loss of at least $1 or $2 from entry. So I'm glad I got stopped out, because look at this, not good. All right, so EMPH also not looking good. So EMPH, this one has been bought up. Well, it has been seeing some good insider and institutional buying as well. However, a lot of solo names are still not being able to find a bottom. So for EMPH, I truly thought that we can see some sort of a pivot at 129, but again, today solo got destroyed. So Commander or Don, you know, I would say for EMPH, there is another significant support at 113, which I've drawn already a long time ago right here on the weekly time frame. But I'm not going to trust it too much. However, since we are so overextended to the downside, I mean, even on the weekly time frame, we're nearing oversold levels here, right? If you take a look at the RSI on the weekly time frame, the value is at 33.02. We're about to hit 30, the actual value of the RSI. And I wouldn't be surprised if the RSI is below 30, maybe around 28 to 29 once we hit 113. So again, being optimistic here, if we do go down to 113 in the future, I will want to buy it there, right? Because we'll be really, at that point, really overextended, right? And so we can actually get, you know, if you just want a week of profits or of a swing on EMPH, I would believe that 113 will be a great spot to get an entry for a nice pivot back up higher, and possibly even retest 129, and that could possibly be the target there. Since now we are below 129, this is our next resistance. Okay, we have created 129 to be a resistance from the previous from its previous past of being a support level. Okay, so that is where I would say will be a good buy point for EMPH. And then energy, yes sir. So if you guys follow my Instagram, right, I posted this 2 weeks ago on Instagram when the chart looked like this. Bam. Okay, and I said, everyone is now looking at XLE, right? And obviously this is just from what I'm seeing online on FinTwit, and everyone seemed to be so bullish on XLE. And you know, I was bullish on XLE since like what, mid? No, not even mid. Even before summer started, I told everyone to continue to keep their eyes on energy, because I believe energy will start running in the summer, right? Early summer. And I also said that it's possible to see energy running for the second half of this year with other defensive sectors. And guess what? That's exactly what we've been seeing for the past couple of weeks, right? However, at that moment in time when I posted XLE, right, I was like, okay, well, first of all, we have retested this descending resistance trend line. And if you guys don't remember, I told you guys this multiple times, XLE, or the entire energy sector, is creating this really nice macro or large wedge with this ascending support trend line coupled with this descending resistance trend line. And so we have this wedge here, and on that week, okay, I said, well, look at this. This is our third retest on this descending level of resistance. And I can, in my head, bet that we can possibly see a rejection at this third retest of the descending resistance trend line. And so on top of that, in order to make my case even better, I saw people getting very bullish. I saw everyone talking about how, oh, I'm going to long energy because it's been doing so well for the past couple of weeks, right? And for the entire summer so far, the summer season, or the seasonality trending months for energy overall. So, you know, that told me that, hey, if people are realizing this now at the top here, at the actual retest of this descending level of resistance, right? This trend line here, I am potentially about to see a top-ish price action forming in the next couple of weeks for XLE. And guess what? Guess what happened? Look at that. And that's exactly where we ended up today, right? So the markets were pulling back, and energy couldn't also take that as well. And so it started to pull back more and more, and now we have officially rejected from this descending resistance trend line. Okay, so XLE. Now, since we have expected this trend line perfectly, okay, I completely expect energy to break out from this descending resistance trend line. I could be completely wrong, but I love the fact that we've been correct so far on the fact that, you know, energy has actually ran up to the upside even before we saw anything like that, of that sort, or any type of price action that even indicated that we're going to be running to the upside. But based on seasonality trends, energy would be running in early summer or mid-summer. Okay, and that's exactly what I told my members, and bam, voila, that's what we got. And so if I am going to just focus on what I said here, it's possible to see energy running for the second half of this year with other defensive sectors. Then this is a great dip opportunity here. Buy the dip, BTFD, or buy the frickin' dip, right? So if energy decides to bottom out earlier, even before we see a transition from quarter 3 to quarter 4, I expect energy to at least come back down to retest around an area between 84 to 85. So make sure you guys take note of that, because if we do decide to pivot at 84 or even 85 or in between, that will be a great time to grab some XLE here, right? This is the select sector fund for energy. All right, make sure you guys understood that, what I said. Now, if you guys don't want to trade XLE, or if you guys want to, if you guys are feeling a little bit more frisky, a little bit more, risky and frisky with energy, you guys can take a look at ERX. Okay, this is the bull 2 times leveraged ETF for energy. And wow, look at that. It looks very similar to XLE. Right, we have, whoa, no way. Right? We have the same looking, okay, we have the same looking trend lines here, which create, bam, okay, it creates a macro wedge on the weekly time frame. Okay, so Commander Sparky, hopefully that was helpful. And wow, on the second dot here, ERX looks a lot better than XLE though, because ERX is at a very nice pivot point. We're sitting right on that weekly 50 SMA here, this dark blue line. But if we do lose it, I mean, we still have the weekly 10 SMA line here, so this won't be bad. So yeah, if you guys want to be a little bit more risky and frisky for energy, ERX is your way to go. ERX has actually treated me very well last year too. So I think it was early last year. Yeah, early last year. Very, very nice. All right, welcome guys. Oh, more people are joining in. Welcome. If you guys want to leave a like down below, just drop that like down below. Make sure you guys do. But if you guys don't want to, that's completely fine. I only tell you guys that because it really helps with the YouTube algorithm. But yeah, overall guys, hopefully that was a very good insight into the markets for tomorrow, right? And for the months ahead of us as we transition from quarter 3 to quarter 4. I have been repeating this multiple times, including even before that. If you guys have been following me, you guys know I'm always one step ahead of the game. Not trying to brag, right? I'm just telling you guys as it is, right? So, like for example, what I just told you guys about energy. All right, I've been one step ahead, or even 2 steps ahead. You guys can say it like that too, if for energy here specifically. So again, we'll probably be 2 steps ahead again with my analysis that I just gave you guys about the market, and also for the fact that we're about to see the worst month ahead of us, the worst performing month ahead of us. So make sure you guys are staying hedged, or again, if you guys want to be exposed to the markets, be exposed very, very little. All right, that's how you're able to protect your money. And also have very logical but tight stop losses. Very, very important. I'm so glad I was stopped out of SCDG today earlier in the morning. Why? Well, look at this. Right, my entry was slightly underneath 164, but what happened? Right, we closed at 156.94. That's so far away from where my stop loss was and where I exited. Right, so thank God for stop losses. Okay, so again, make sure you guys have your tight logical stop losses in hand, especially even if you have a very, 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 very little risk that you're putting into each single trade that you're trying in this market environment, right? So hopefully I'm going to continue to stay optimistic, and hopefully we can see the markets bottoming out between the transition from Q3 to Q4, and sometime around mid to late October, we can see that nice reversal coming in. All right. Okay, so that is it for tonight. Hopefully this session was very, very insightful, and hopefully my complete 100% speculation comes true tomorrow when Jerome Powell speaks at the Jackson Hole event, or the symposium, the economic symposium. But overall, if that doesn't happen, that's fine. And all we need to know is that the market is telling us that it wants to continue to move back down. Okay, and we'll continue with the seasonality trend that usually occurs in Q3. All right. Okay, so I'll see you guys next Tuesday. And yeah, have a great rest of your night, and good luck tomorrow. Thank you guys.